guys, today I'm with M. Udamsak from FWX Finance. So today we're going to be diving into DeFi strategies, leverage trading strategies, and also different investment strategies across different market cycles since he's an investment expert. All right, So let's get to know more about M and his background and your role at FWX Finance.
Okay, my name is M. Udamsak. I'm actually a co-founder of FWX. I did my master's and PhD in financial mathematics, specializing in derivatives, pricing, hedging, and portfolio allocation. And as a co-founder, what I have been doing is to actually help designing a protocol, do testing, stress tests, and designing the trading algorithm technically.
Right. So we have like an expert in-house today, and he'll be sharing a lot of alpha and insights, and also stick around to the end because he'll be sharing some alpha leads as well for FWX Finance. So let's start with a brief concept about leverage trading. Can you explain to the audience on what exactly is leverage trading and how can user perform this strategy using DeFi products?
Right. I think most people, they are familiar with the word like leverage trading, but actually for leverage trading, it means that like if you have some amount of capital, then you can go over your capital, like you can go more than you have. That technically that's what it is, but you can classify, me personally, I classify the leverage trading into three categories. The first one is lending and borrowing.
Okay.
Well, people say that's a lending and borrowing. Like what does it do with leverage trading? But if you look at compound or Aave, like you can go there, put your, like, let's say Ethereum as a collateral, you can borrow USDT, right? And then you can use that USDT to buy Ethereum again.
Yeah.
Right. So that's considered leverage trading. So you can go like 1.5x on your position when you are bullish on the market. Another thing would be margin trading. Margin trading is when you put a collateral, right? And then you borrow some money from other people, and then you use that to buy some other assets. And that will help you leverage the position as well. And that can go over 2x. You can go 2x, 3x, 4x, 5x on margin trading. And the last one that we are really familiar with these days is perps, right?
Yeah.
Technically, you don't need to buy anything. You get into a contract. Right, you bet it's going to go up. The other people bet it's going to go down, and then you get into contract, and that's leverage trading as well.
Which category would you say FWX Finance is offering?
We are on the second one, which is the margin trading.
Okay.
These days people will say that perps is a lot better, more capital efficient, right? Because you don't need to swap, you don't need to buy anything. You just get into a contract, and then that's it for perps. But the disadvantage about the perps is that you cannot do it for new tokens. That's a problem. Like let's say if I have M tokens like today, right? And if I want you to go leverage on M tokens using perps, then when you go long, normally there will be another guy, so-called like market maker, to actually be your counterparty, right? And the market makers actually get exposure to the direction of the M token, right? And normally no market makers want to take new tokens because they don't know how it's gonna go, right? But for margin trading, is actually easier, right? I can put down USDT, for example, and then you can borrow my USDT, and then you buy more of M tokens, right? And that actually impacts the price in the real market as well.
Right, I see. So there are like different strategies that suits different risk appetite as well, right? Like lending, borrowing would be more of the like lower risk compared to like perp or like margin.
It's a lot higher.
Like super leverage, degen yields, right? So can you help share some insights on like what are the pros and cons of leverage trading on like centralized exchanges compared to on-chain products?
Right. Well, back to the leverage trading. Like when people talk about like futures, right, going long and short, people like degens, right? We're usually talking about like how to go leverage, how to go like 5x, 10x. But normally when we talk about like going long and short, for some people, like for example, for me, as a risk supervisor, let's say, we do use shorting to reduce the risk, not to increase the risk. So what we do is that, for example, if I'm holding ETH or AVAX, for example, what I can do is that, like, I think that there might be some news which make the price like go up like crazily or go down crazily. So what I can do is that I can short AVAX, but I hold AVAX as well. So if the AVAX price goes down, then I'll lose the money from the AVAX tokens that I'm holding, right? But I'll get the money from the short position. So in that case, it's like it's called hedging. So we buy the token and we use shorting as a way to reduce risk. Okay, so that's one point. That leverage trading or going long and short, it doesn't need to be about like increasing the risk. It can be about reducing the risk as well. So when you talk about what's the question again?
So what are the pros and cons
of
leverage trading on centralized exchanges compared to on-chain DeFi product?
Decentralized exchange, I think the pro is that it's easy, right? Centralized exchange is always easy than like shorting and longing in on-chain, right? First, it's easier. Second, it's cheaper as well. The fees are a lot cheaper. The bad thing is sometimes it's centralized. As the name suggests, right? Centralized and decentralized. So when it's centralized, you have what we call counterparty risk. So if you have, let's say, if you have like 100K, then you probably put it in centralized exchanges, you don't mind, right? Well, you might as well, but not as much. But if you have like 100 million, let's say you want to do a leverage trading strategy of 100 million, then you put it in one exchange, and then it's centralized. And if something happened, like what happened in FTX, blah blah blah, right? So we can potentially lose all the money. But being on chain is a little bit more expensive. We pay gas fees, we pay like higher fees, but it can be safer. Well, not completely safe. You need to look at protocols which are completely decentralized as well, because we have so many protocols which are decentralized in disguise. Right? They say like they are on chain, but if you go matching, you don't know what happened behind the scene. So that's not completely decentralized. So if you get completely decentralized, the protocol is well established, properly audited, then it's a lot safer. So you can diversify between like the centralized and decentralized.
I see. So yeah, that's like pros and cons of different ones, right? Depending on like which one suits users more. But I think like, can you share like what are some of the like benefits for like, let's say, using FWX Finance for like on-chain trading?
Okay, one example. Well, apart from like going short and long on new tokens, right? That's what we talked about. But one example for high-level user, for example, if you remember last year, there was a phenomenon when the funding rate is so high, right? I think it went up to like 30%, 50% a year, right? And the problem is, if you go long on a centralized exchange, then you need to pay that 50% a year. Right. Well, when it's quoted in like 8 hours on Binance, for example. But in a year, that's 40%, 50%, and then you end up paying a lot to do leverage, right? One thing you can do is that you can go short to get the funding fee, right? Because the funding fee is a discrepancy between the long and the short, right? So if the funding is so high, it means that lots of people are bullish on the market. But if you go short, you will get that funding fee, which is 40%. A year, right?
Wow.
So what you can do is that, let's say you want to go, you want to do it on AVAX. You take AVAX token, right? You put it there. You get exposure to AVAX, let's say 1 million USD. And right after that, you go short on AVAX to get funding fee. 40%, 50% a year.
Wow.
Right? And if AVAX price goes up, then you lose money on the shorting, but you hold the token. It doesn't really matter. Right? But if the AVAX price goes down, you get the money from the shorting, but you lose the money from the token. So this position is called delta neutral, meaning that you're getting arbitrage from the funding fee. But what is it about? Like, why we're talking about that? Because we're talking about FWX, right? I'm trying to say that you can go beyond that. How? Let's say if you want to go short, right, on centralized chain, you get 40%. If you have 1 million, you get 40% of the 1 million in a year. right? What you can do is that you can take 1 million AVAX, you come to FWX, then you put it as collateral, and then you go long using margin trading.
Right.
But when you do margin trade, you don't need to pay the funding fee. You pay borrowing fee. Because margin trading is technically borrowing people money to do trading. So you pay like small borrowing fee, like 10%, 6% a year. And then you can leverage like 2x, 3x. And then for that 3x, you can get the size up to like 3 million. And then you go short on the centralized exchange as well.
Yeah.
So instead of 40% on 1 million, you can get 40% on 3 million.
Oh, wow.
You know what I mean? It's like you combine the margin trading and the perps, the futures together. And then with that, you can like actually put your position higher for 3x. And then you get arbitrage. Like it doesn't matter if the AVAX price goes up or down.
Ah, I see. So pretty much you can use FWX finance to earn money in any market condition, right? Yeah. So
why I'm talking about the whole thing, because at FWX, as I told you, it's a margin trading platform, right? So let's say if you have 1 million USD, right, and you go short on centralized exchange doing funding rate arbitrage, then you can get 40%. But what you could do is that you can come to FWX, put down the 1 million as a collateral, and then you can go like 5x or 3x on the long position on AVAX. And you need to pay the borrowing rate because, you know, going long on margin trading is actually borrowing USDT, right? So on FWX, you are paying borrowing fee, which is around like less than 10%. But on centralized exchange, you're getting funding fee, which is 40%. And with 1 million, you can go up to like 3 million, 5 million. So, you know, the yield is going to be a lot higher. Yeah, that's way of doing like really conservative trading using leverage.
Right. So if you want more returns, use FWX, right?
Please.
So pretty much a money printing machine. Right. So can you share how would you like recommend like DeFi strategies would varies across different market conditions, from bear market to bull market to like sideways market?
Well, I think deciding to invest in a particular platform or using a particular tools depends on your risk preference as well, right? Because like, well, I'm also teaching in a university as well, like in portfolio allocation. So when we talk about portfolio allocation, the first thing we talk about is that it's a really highly subjective problem, because first, you and me, we have different initial positions, right? You probably have a lot like more capital than I do.
He probably is like the pro and like the whale portfolio, and I'm like the small fish, you know.
the shrimp. But that's a point. Like we have different sizes. We have different risk preference, right? You may like think that like losing like 80% is not a big thing, but for me like losing 20% is already a big thing. So we are different. So deciding to use tools would be different as well. But for me personally, for the like a bull market, right? What we would do is we do directional trading, right? When I say directional trading, I mean like, for example, if I'm bullish on like AVAX, for example, what I can do is that I buy AVAX. Let's say I put a 100K in AVAX, but that is just buying AVAX, right? Everyone can do that. What I can do more is that I put that 100K, put it as a collateral, and then go like 2x on that again. Well, but don't do 30x. Well, it depends on the risk preference. If you like really like, you know, if you're a risk seeker, yeah, probably 30x is okay, but you have really high risk of being liquidated. So I do like 2x, 3x on the bull market. On the bear market, we can do pretty much the same. We sell all the AVAX, and then we take all the stable coins, and then we do some shorting as well. For the sideways market, what we can do is we can do like arbitrage. We can do cash carry. We can do lots of arbitrage out there, and it's gonna be 10%, 20%, 30% a year. It's okay. I think it's better than, for me, it's better than like trying to bet it's gonna go up or down in the sideways condition, which is pretty hard to bet.
Right. and then like sideways, like you mentioned market neutral or delta neutral before, like which market condition would that be best for?
For me, it will be the sideways market, right? Because like, in the bull run, we don't want 30%, 20% a year, right? We want a lot more than that. So during bull run, we do directional trading. So we do like leverage on the positive side, like on the long side. On the bear market, we do leverage on the short side. But during the sideways market, we tend to reduce the risk by not trying to bet and doing like arbitrage trading strategy.
Awesome. Wow. Like very detailed.
It is.
And like pretty much you can earn money using DeFi from any market conditions, right? Not just like bull or like if some betting like something would go up or like go down, right? You mentioned earlier about like cash and carry trade and arbitrage. So let's dive deeper into that. Let's go with cash and carry first. Can you explain to the audience like the concept of cash and carry trade and how do you use DeFi product to do that?
Right. Well, let's first talk about arbitrage. Arbitrage is a strategy. It's a big word, right? It's a strategy that you can go and take, and then it's quite certain to some degree that you will be profitable, right? And cash and carry arbitrage is one of the strategy. Just one of the strategy. There's so many strategies on doing arbitraging. How to do it? Like first, you need to know the basic of futures contract. In like on like centralized exchanges or on in DeFi platforms, we have two types of future contract. The first one is perps. Perps has no maturity. Maturity is like the end of the contract, right? And the other one is deliverable, right? Deliverable is a contract when you go long. At the end of the contract, there will be some delivery happen, right? And for the deliverable contract, normally 99% of the time, the price of the future will be higher than the price of the spot. Let's say like today, for example, if you go to like Binance, for example, look at the spot price, which is the Bitcoin price, and the future price. If the Bitcoin price is like 60K, then the future price will be around like 62K, maturing in like 3 months, for example. So what you can do is that you can go and short the future contract and buy BTC, right? If you buy one BTC, you put that as a collateral, and then you short future contract, you will never get liquidated, right? It will show that the liquidation price, no liquidation price. And at maturity, like 3 months after that, by theory, the price of the future contract will be converging to the spot price, to the Bitcoin price. And if you wait 3 months, you will get 2,000 for free.
Oh,
yeah, it doesn't matter. It doesn't matter if BTC price goes to like 100K or like 20K. I hope that doesn't happen. To 20K, then you always get 2K difference, and that's already okay. Like getting 2K for sure, under some market conditions that you don't know what to do. Like you don't have like strong opinion.
Ah, interesting. So besides like cash and carry arbitrage. You mentioned that there are other arbitrage strategies as well. Can you give some examples?
Well, some other arbitrage would be the one I talked about before, funding rate arbitrage, right? When the funding rate is high, like really, really high in the positive side, you can short the future, the perps, to get the funding rate. And if you go shorting and the price go up, then you lose the money, right?
Yes.
To help that, you buy the spot as well. So that's a delta neutral. You buy the spot, you short the future. If the price goes up or goes down, you don't lose the money at all. That's another arbitrage strategy. Another one would be a lot more complex. It will be like, for example, like option selling. Like if you sell like call option. I looked at the call option like a couple of weeks ago. The call option at strike 100K, meaning that you will be profitable when the Bitcoin price goes above 100K. And to get into that contract, you need to pay like nearly 10K.
Oh, wow.
Which is really expensive, right? So is it possible that you go there, you sell the option, and then you get like 10K for free, right? But you will have a liability if the Bitcoin price goes up to like 100K.
Oh.
So what would you do? That will be strategy, right? So if you get proper strategy, you sell the option, and then you do like delta, just a financial engineering term, like delta hedging, gamma hedging, like that kind of thing, and then you can come up with strategy to hedge the option, so that you make sure that with the premium that you get, you always be profitable. You can do that as well, or you can replicate one option with 10 options. That can do as well, because like all the options they depend on the only single variable, which is the spot price.
I see.
It's quite technical.
Yeah, it is technical, and like would love to dive deeper into this like in another episode.
Okay.
Also, in like lending, let's say for like simpler strategy for like lower risk, what are some of the ways like to earn like passive income at low risk, or like lending? Yeah.
Well, for lending, I think it depends on how well you know the market. Like for example, if you don't know anything, right, you just get started. The easiest way to do is just go to like lending platform, put stable coins there, and that's it, and you get like 3%, 5%, 6%, and that's it. But that is quite safe, because the lending platforms have been with us for like years already. Or you can put it on earns, right? Like the earns on many centralized platform. But we learned from the history that there'll be some platform which had a problem with earn product as well. Or if you are more advanced, then you can do, as I told you, cash carry. If you do cash carry today, it's around 14% a year for simple cash and carry, and you can go like a lot higher than that, like 30% a year. So it depends on how well you know the market, you know the tools. So if I were you, I would just learn, like just put on earn first, and then learn like what future is, what is a strike price, what is a maturity, what is delivery, and that kind of thing. And then we go beyond that to the point that we get more APY.
Got it. So let's say if you're giving some advice to someone who's just starting out, someone new to DeFi, what would be some of your advice to get started? And do you have any tools that you would recommend for like tracking different like DeFi yields and market trends and narratives?
Right. Well, for starters, I mean like complete starters, I think there are lots of beneficial materials out there. Like for example, like your channel as well, that will be like really beneficial to all the people. So for people who want to start out, too many, right? So many. So I'm going to be talking about people who want to start doing like algo trading on DeFi, or want to do like automated strategy on DeFi. I would recommend a couple of like simple platforms, like for example the block, right? Everyone looks at the block, DeFi Llama, and many other, right? There's so many out there. But if you want to really go into the strategy, what you need to learn is, for example, Web3 library, right? Because if you want to get into like automated trading, you want to do this strategy, that strategy on DeFi, there's no single place that you can get all the data out, right? So what you need to do is that you need to be able to extract the data from the blockchain, right? And doing that these days is pretty easy already. You can use Dune Analytic, you can use Web3 library on Python, and then like keep extracting data, trying to do like back testing, forward testing. So it's something similar to what you would do in centralized chain.
Yeah.
Just different tools. But these days they are pretty easy already. Well, relatively harder, but not that hard.
I see. All right. So if anyone is also looking for investment strategies, his page also has a lot of content. All right. Moving to next question, almost last question now. More on the macro and market outlook. What would you say is like the future market outlook for DeFi space and also crypto narrative? What are some of the key macro trends that you think would be a key catalyst for the market?
Right. Talking about the big picture first. So these days, me personally, I'm looking at the big cap coins and tokens first, because I believe that it's not, the time will come, but the time hasn't come yet. Because if you look at the DeFi dominance, meaning that the dominance of the DeFi tokens, they don't move yet. So it's keep at 5% roughly. So it means that when we have seen the market went up quite a lot, but all the DeFi tokens, most of them, they stay low, meaning that the money doesn't flow into DeFi yet. And we learn from history that normally the money would flow into Bitcoin, Ethereum first, right? And after that, halfway of the bull run, and then it will go to small tokens. But talking about small tokens, what narrative I'm considering? Of course, as a founder of the leverage trading platform, the reason we wanted to build the leverage trading platform at the first place is that because we're bullish on this trend, right? But not perps, not leverage trading, because if you went back 5 years ago, 6 years ago, we have permissionless trading strategy, right? We have Uniswap, we have so many swaps, right? so many swaps. But the good thing about that is that, AMM is not efficient.
Yeah.
We know that. It's just XY equal K, right? It's not efficient. But the good thing about AMM is that it allows you to list any tokens you want without market makers, right? Because the protocol itself is a market maker. So I think the next trend for the market will be the same, the permissionless market, but for future trading. And that's what we have been building. We try to let people doing the same as Uniswap come to our platform, provide liquidity, and other people can trade on using leverage, long and short, straight away.
Right.
That will be fun, because in crypto market, 1x is not.
Yeah.
It's too slow.
Yeah, and different cycles. I think this cycle is quite different from last cycle as well, right?
It is,
Since, more institutional players are jumping in.
It is, yeah.
ETFs getting approved. So, do you think the market dynamics are different, market participation? For example, the composition of institutional users to retail users in the market?
I think things won't be the same, but the thing that will be the same is the people psychology, right? When these days, when Bitcoin when the Bitcoin made the all-time high, you talk to friends. Most friends who are really happy, they are people already in the market, right? But when the Bitcoin price and other token price go up a lot more, then we're gonna get more and more people get into the market. If you go back 4 or 5 years ago, right? So many friends who didn't know Bitcoin before, and now they're probably listening to this,
Yes.
Video already, right?
Yeah.
So I think in the next couple of years, 1 year and 2 years, there will be a lot more people, a lot newcomers to get in, and institution investors, they are just one of them, but there will be a lot more retails coming in as well. But institutional investors, they know it better than the retails, so they come in first, and that is a good indication, because if institutional investor get in, why wouldn't more retails would jump in as well?
True.
Right.
True. So I think
I'm still really pretty bullish on the market in the coming year.
in the coming years, and you think that's kind of still roadmap to mass adoption, right?
It is, yeah.
And what are some of the key verticals or sectors that you think are trending narrative in the crypto space at the moment?
I think that the trending one would be first it's a leverage trading, permissionless market. The second one would be, people have been talking about it, RWA, because we look at Backlog, right?
Yeah.
Backlog, they say that they will create a market for all the tokenization, and Backlog is quite big, and I think they own many companies, listed companies in the US as well. So it's really hard for them to convince CEOs, convince executives to get their tokens, to get their assets tokenized. So I think that will be the market to actually keep an eye into, because as a lecturer in the university, these days I have been asking my students, my class 300 people in the class, investment class. In the past 3-4 years ago, I asked them what do you invest? And the answer would be stocks, right? Stocks. Crypto were there already, but just 5% crypto. But these days, like 60%, 70%, they are saying cryptos, not stock. And if you look at brokers, like traditional brokers for stocks, less and less people get registered, right? Because the newcomers, like youngsters, new generation, they tend to go on crypto markets. And what is the implication of that? Like if you are in the stock market, you are brokers on that market, you know where your clients are, you know where customers are, right? You need to move into crypto as well. So what you can do is that you tokenize your stocks. We're gonna see tokenization of equity for sure. Don't know when, but we're gonna see that for sure because they need to bring the old money into the new generation.
Yes. Yeah, you mentioned some really good points there, right? Like the shift from like the older generation to like the current crypto space, which has a lot of like really young, talented, and smart like kids that just started trading crypto super early.
Right.
Yeah. So I think that the market shifted quite a lot back in the days.
Yes.
And people are more like receptive to like newer digital assets as well.
Right.
So okay, final question now. The Alpha League. So can you share some exclusive insights or Alpha Leagues about like full FWX finance, some of the things that people in the audience should keep an eye out for for upcoming roadmaps?
Yeah, we have launched a permissionless market already, and it's a place where people can, if you get the tokens today, an hour after that, you can get your token listed for leverage trading straight away. People can go long and short 2x, 4x, 5x on your token straight away. I think that's one of the advancement on the DeFi trading strategy that we put there. The second one is that we will do perps as well because people love perps, but perps will be for major tokens rather than new tokens. For new token, we still use margin trading. We're still going to be launching lots of campaigns that you can use our tokens to stake. But not stake, but we call it stake bet. So technically, we have like two pools, for example, right? Based on like the real event. Right? Let's say like if Bitcoin is going to go like higher than 100K within this year, then you can bet like pool A and pool B, right? And while you are betting, you get APY. That's called staking.
Interesting.
But in the end, if you are right, you get the money from the other pool using our tokens. So you get both APY of staking, and then you can go betting as well, right? Because that would be like a gimmick. I'm not saying that you should put like 500K in here, but it's the gimmick of like using the tokens and it's for fun, like to make community more fun. Yeah.
Oh, so that's like a very cool concept. So definitely keep an eye out for the upcoming roadmap on FWX Finance, and also stay tuned, subscribe for more Alpha Leaks and insights on my channel. So that wraps up today's episode. Thank you so much.
Thank you.
And for today's, thank you for your time.
Thank you for having me.
So much alpha, so much insights. We learned a lot on DeFi trading strategies. So hopefully you can make more profit in your next trade. All right. Thank you.
See you. Thank you.